David Burrows is here on this edition of Market Call. The man from Barometer is taking your questions on North American large caps. Hello again, I'm Michael Hainsworth in for Andrew Bell. Thank you for not filing complaints with the boss. Andy does return tomorrow, even though I said that yesterday. We're off to Vaughan, Ontario, as promised, for Mark. Hi, Mark.
Hi, Michael. Hi, David. My question's on international paper. I know they've increased their prices of product 2 or 3 times this year, trading at 13 times next year's earnings. Looks like the stock is almost at an all-time high. Just want to know your opinion of IP at this price.
Right. So, Mark, our base case is that we are in a process of reflating the system. So materials are behaving actually quite well for the first time in a few years. And the forest sector within that group has caught our attention. Breadth is expanding, price momentum is improving, and certainly pricing is getting better. We've chosen to focus more on the lumber side of things. And so we own Louisiana Pacific, for instance, because we really like the home building cycle in the U.S. Although, international paper, more on the packaging side, is also benefiting from an improving economy and certainly, isn't hurt by people like Amazon sending out lots of packages.
What, though, of the argument that the hurricanes Harvey and Irma and possibly Maria as well will put the Canadian lumber producers in a very good position as the softwood lumber dispute hits its peak?
Yeah, so, if you speak to people in the Canadian lumber business, these tariffs really have not had much of a dampening effect on demand, right? They're just paying the higher price in the U.S. So Canadian producers are performing really well also. If you look at West Fraser, if you look at International Forest, they're all acting well. So I like that lumber group, and in fact, I run a global macro portfolio that invests in key themes using ETFs as the vehicle. And it's an actively managed basket, and one of the best performing assets I've owned this year is the CUT, which is the Guggenheim Global Timber ETF.
Okay.
And I continue to really like that. International paper looks good, and pricing is firm. And if you think that the global recovery is going to continue, they should continue to do well. We have accelerating growth in more countries around the world than we have in 7 or 8 years. So I would like international paper. We don't own it, but I also really like the timber companies.
And the CUT, the Guggenheim MSCI, is Westrock, Weyerhaeuser, Amcor International Paper. Mark is the 4th biggest percentage with just shy of 5%, and Packaging Corporation of America as well. Thanks for the call from Vaughan, Ontario. Steve in Toronto, thanks for holding. Hello.
Hi, thanks for taking my call. My question is on Qualcomm. It doesn't seem like the market likes Qualcomm as of late, and wondering your thoughts, David, on if it's because of the legal battles that they have upon them right now. And thanks very much for taking my call again.
Great.
I'll hang up and listen.
Yeah, there's a bit of a bun fight with Apple, isn't there?
Yeah, there is. They've got legal issues. They've had some disappointments to the street. Again, I go back to, if you've got a sector that's on fire and you've got a company that just can't get out of its own way, you probably need to move on. Now, I'm not a value investor. I don't like to buy broken assets hoping that they get fixed, because if the opportunity is now, I want to take advantage of it now. I would focus on companies like Avago, Broadcom, and NVIDIA, as opposed to something like Qualcomm.
Okay, so Broadcom, ticker symbol AVGO, is now trading at $240.94. That's an entry point as far as you're concerned?
Yep, I would continue to buy it here.
All right, thanks, Steve, for joining us from Toronto. Kieran in London, hello.
Hello, gentlemen.
Hi.
My question is on the SPY. I know you referenced it in the past, and exactly what is it, and how would it affect a small investor or even a large money manager like yourself?
Right. So the SPDR is obviously the one decision way to get exposure to the S&P 500. We really like the U.S. equity market, and certainly the recent weakness in the U.S. dollar doesn't hurt S&P 500 earnings, large company earnings. I think you do just fine with it. I do believe that we are in a market that is benefiting certain sectors more than others and certain companies more than others. So I would prefer to have a little bit more targeted exposure. Maybe some of the key sectors like KBE or XLF for financials, IYJ for industrials, and I'd pick a basket of 3 or 4 of them. But I think you're going to do fine in the SPDR. We're in a structural bull market. There's lots of capital looking for a home. U.S. corporations are in very solid financial position. Earnings revisions are going higher. Economic data is improving. I think it's going to have a strong fourth quarter. Spider's going to do fine. But there's other neighborhoods within equities that I might look at to get a little bit more targeted.
Kieran, thanks for joining us from London. We're taking a brief break. Back to your questions on North American large caps for David Burrows at Barometer in a moment. And when we return, we'll talk about the demutualized life insurers.